Jim Bottrell is here. Jim has thebuyers.com. Jim, always great to have you. Welcome back to the Inland Empire Answer.
It's always great to be on. So much fun.
All right, so we're going to jump in. We'll have a little fun at the end, but let's get to business first because interest rates have come down since we last chatted. Has that caused any big changes?
I wish. No, unfortunately. No, interest rates, I'll give you the whole story. Interest rates have come down about 1/2, and I say mortgage interest rates have come down about 1/2 of 1%. So I'm seeing, homeowners get, new buyers get rates in the low 6% range is what I'm mostly seeing. Unfortunately, that has not been enough to change the calculus out there of those people, those homeowners that are sitting on their sub 3% interest rates. They're sitting tight. So further, the interest rates dropping to the low 6s is not quite enough to change the calculus of the home buyers either. So unfortunately, no, we haven't seen much change in the market with the latest reduction in mortgage interest rates.
Well, that is a bummer, but we have seen the Fed report that interest rates are likely to go down. Do you think that this is finally going to get the market to maybe free up some inventory?
Yeah, well, hopefully. So I do need to clarify that when the Fed talks about lower interest rates, they're talking about reducing the Fed funds rate, and that's not actually doesn't directly control mortgage interest rates. The Fed funds rate is simply the bank-to-bank overnight lending rate. So when the Fed increases that lending rate, the bank's cost of business to do business increases, and then they then have to pass that increase to the borrowers in the shape of higher interest rates. And it also happens in reverse. When the Fed lowers the Fed funds rate, interest rates will go down. And it's through this process, which I'm saying is an oversimplified process, it's through this process that the Fed controls the economy. They can speed up the economy by lowering the Fed funds rate, which is causing consumer interest rates to drop and thus encouraging people to borrow and spend. And the Fed can also slow down the economy, which is what we've been seeing for the last couple of years, by increasing the Fed funds rate, which is causing the consumer interest rates to increase, which discourages people from borrowing and spending. Again, that was an oversimplified example, but that's how it works.
All right. So do you see the mortgage interest rates coming down as we get further into the year?
I'd say probably not, actually. Since June, and this is why. Since June, mortgage interest rates have actually dropped about 0.5%. Sometimes I'm seeing slightly more than that. But you have to realize that those mortgage interest rates dropped with no Fed funds rate reduction. So my guess, my crystal ball, is that the Fed is going to lower their Fed funds rate throughout the rest of this year. Yeah, I know.
Fed funds.
Fed funds rate, yeah. However, I think a lot of that reduction is already priced into mortgage interest rates. So we might see a little bit more drop in the mortgage interest rates, but if it's going to be negligible, if at all.
So this is kind of what we've been talking about. It's a theme. You don't see much of a change then in the real estate market coming soon.
Well, actually, I didn't say that.
Oh.
Normally, I would say yes.
Mm-hmm.
We should see more buyer activity simply because people will hear about the Fed reducing the Fed funds rate, and they will incorrectly assume that mortgage interest rates are dropping at that time. So people just hearing that the Fed is reducing the Fed funds rate, even if the mortgage rates interest rates don't change, that will bring people off the sideline. That's a normal market. However, we are in an election year. So it's a weird election. So this is in the industry. This is my 5th election cycle since being in the industry. And I've noticed that during the last 90 days or so prior to every presidential election, people tend to hunker down and they're waiting for the outcome of the election. They literally tell me, I'm waiting until after the election to see who wins, which I always thought was a little off because 100% of the time they end up doing whatever they were going to do regardless of who wins.
Right. So you mentioned that mortgage interest rates did come down some. Has that benefited anybody?
Absolutely, yes. There has been a tremendous benefit to all those people who bought homes between, let's say, July 22 and up to just a few months ago. Given that the home prices have steadily increased since they bought their homes, they bought their homes for less than they could buy that same house today. However, they bought their homes at the higher interest rates, some as high as 8%. The good news for them is they get to refinance those loans into the lower interest rates that we have today, which reduces their monthly payments. So as a result of this, they got to pay, in summary, they got to pay less for their home than they would have to pay for that same home today. And now through refinancing, they get to lower their interest rates, which means their monthly payment will now be lower than it was. So that's a true win-win for them. And that's one of the things, many things, that I think renters don't quite understand. They tend to look at the cost of their rent check in the exact same way they look at the cost of a mortgage check, like the payment you make each month. They don't realize so many advantages that a mortgage provides, and they don't realize that mortgage payments never go up, but mortgage payments can go down. Conversely, I've never seen rent go down. Rent only goes up.
That's right. And you're just paying for the ability to rent it, right? You don't have all the benefits that ownership brings. Now, I recently heard that with the new rules for realtors, which we've been talking about with you, that buyers are now going to have to pay their own buyer's realtor. So with everything housing so expensive as it is already, how can a buyer be expected to pay that on top of everything else?
Yeah, given the way these rule changes were rolled out, it doesn't surprise me that there are rumors out there suggesting the buyer will have to pay their buyer's agent. I mean, this whole thing has been rolled out just terribly. The way it's worked the last 40 years is that the seller paid the buyer's realtor a, quote, solicitation, which was basically the commission that the buyer gets. And that was paid as an incentive for that buyer's agent to bring their buyers to that seller's home. That solicitation was the commission, and it was how buyers' realtors got paid, and it worked great for 40 years. Now attorneys got involved and screwed it all up. So now that system is over, and there's no publicly offered solicitation by a seller, there's no offered commission to that buyer's realtor. But that doesn't mean that the seller can't or won't pay it. The fact is that most sellers still are. So the only thing that's changed is the way the paperwork has to be done. And it's actually working out the same way it's always been. It's the buyer's money that's paid for everything. So think about it. There's no money to pay for anything until the buyer's money shows up. So it's always been the buyer. We just do the paperwork differently now. But to answer your question, will the buyer have to pay their own realtor? My answer to that is buyers have options. Most importantly, they would only have to pay their buyer's agent if they agree to pay it. And that agreement would have to be at the time of the purchase contract negotiations. However, I don't see buyers doing that because, as you said, with everything so expensive today already, how can a buyer be expected to pay that? So, in my opinion, it's just going to end up being the way it's always been, just a different paper drill. So what we're seeing so far with this rule change has been pretty simple. The buyer makes the offer for the home, and their realtor submits, along with that offer, a request for a commission from the seller. That's the change. And it's honestly been pretty simple so far. The only problems that have been is with all the realtors out there whose brokers did not explain to them how this process works. That's been the real issue. The majority of the realtors out there have no idea it works, and that is a shame. My team has been training on this for months now, so these new rules are no issue for us. And actually, while we're at it, let me throw a little plug in there, though.
Yeah.
If you're a realtor out there and your broker has not trained you on how to do this, you probably haven't been trained on many other things you need as well. I have spots on my team, so give me a call. In fact, I'm hosting an event for realtors on this topic on September 4th. If you're a realtor interested in how my team is navigating this market, just give us a call. I'll be happy to teach you too.
I love it. All right. So I just want to make sure people have your web address and know how to contact you. Jim Bottrell is here. He really gives us a good overview of what's happening in the real estate market. He's the founder of Jim Bottrell Real Estate Team, and his website is easy. JimHasTheBuyers.com. JimHasTheBuyers.com. You can always call him as well. 800-498-SOLD. 800-498-SOLD. JimHasTheBuyers.com.